Good. So, welcome you all to today's session as promised. Today, we're looking at the cost volume profit analysis, locally called break-even or generally called break-even analysis. So, it is called break-even or cost volume profit analysis. So each of them, it nicknamed the CVP analysis. So break-even analysis or CVP analysis. So that's the topic today. CVP or break-even analysis. They are the same. Break-even analysis or CVP analysis. So you can add the analysis here. Good. In fact, I also have a name for it. I call it what if. Yes, you understand why I call it what if. So to my own, I'll call it what if analysis. I mean that name not nice. Breakeven is the proper name. Good. What if analysis. Now let's go straight for it. Breakeven. In fact, as them say, you are breaking even, right? It's a point or level of production where the entity record no profit, zero profit. Why? Because your total revenue is equal to your total cost. Total revenue is equal to total cost. So anytime you go to the market, you go and buy things and come and sell. After selling, you didn't even get 1 peso, but you didn't have any loss. So your total revenue was virtually the same as your total cost. It means that you have break even. Good. So that's a break even. Exactly. Now, so the issue is before I go to the definition, I will cite some few example or illustrations. Now, for break-even analysis, we are going to compare revenue, cost, and then profit at various quantity. Profit at what? Various quantity. That's the volume. Good. So that is it. It's about total revenue, cost, and profit. That's all. So first of all, you should know your total revenue. Yeah, that's the sales revenue. Your selling price times the sales unit. You are done. Total cost. It's made up of what? Your variable and your fixed costs, in which we will look at it. So now let's test ourselves small. Something small, okay? Yeah, something small. Something small here. We are going to test ourselves. Before I even define break-even analysis, we are testing ourselves small here. Let's assume that our selling price of the unit, selling price, we have a product, but the selling price is, give your own selling price, okay? Let's assume that the selling price is any figure of your choice, 100. Okay, let's make it 10 cedi. So the selling price is what? 10 Ghana cedis. Variable cost. Now, when it talks about variable cost, is the cost that change with respect to the unit produced. So that's the variable cost. Good. So variable cost per unit, let's assume that the variable cost is also 6 cedis or 4 cedis. Let's assume it's 4 Ghana cedis. 4 cedis. Now, variable cost is the cost that change. If you produce just two of the units, two like this, two like this, good. the cost that you incur will be different from that of producing 3,000 units. So it means that that cost is vary. It vary with respect to what output. It vary. It's like you are producing Sobolo. In fact, each unit that each bottle, you need one bottle, right? Yes, each bottle will consume one bottle. So if you produce 3,000, if you want to produce 3,000 bottles, they have to get 3,000 bottles to available so that you be bagging your Sobolo in. So the bottle cost will be what? Vary. Good. So that's the variable cost. It's made up of, in fact, 4 items, but for your case, only 3 will be there. So they made up of 1, direct material cost, so much, direct labor, so much, and then direct expense. Just that in your case, the examiner will not do that with the direct expense. That normally pop up in break-even. Then you go to variable. Variable production overheads. So variable production overhead. Let me extend this one a bit. So here, so much. Putting this together, this will give us the total variable cost. So the variable cost that I'm going to give this 4 cedi, it can be, here is 50 pesos, 0.5. Here's 1 Ghana cedi, and here's dash. So that's 1.5. Good. So let's make here 2.5, 3.5, and here also is 0.5. Good, 0.5. So in short, all what I'm trying to say is this: variable cost is the cost that vary with respect to outputs, and they made up of this item. You are done. In some situation, the examiner will give you the breakdown like this. So you have to do your working somewhere, sum them up to get one figure representing all the variable costs, which is the 4 Ghana cedi, which is 2.5 cedi plus 1 Ghana, making 3.5. Direct expenses dash. So plus variable production overhead, which is what, 0.5. Good. So making the 4 Ghana cedis. Perfect. Now, when you subtract the variable cost from your sales or the selling price, it will give us something that have a nice name. I will go into a bit. There are 4 items that make the variable cost. So every variable cost, let me do the calculation here small. The detailed workings. Variable cost. It's not compulsory. It is not compulsory for the examiner to give you the breakdown. He can just give you just one figure. You are done. Take it like that. If he give you the breakdown, what do? Assemble all up, then you get your variable cost. But what you are saying is this: the variable cost is made up of 1, direct material cost, so much, direct labor cost, and direct material, then direct expense. Just that this one is unusual. So unusual, right? Good. Putting these 3 together, we call it prime cost. But we will continue. Then we have what we call variable production overhead. Let me write it down here for you so that you can get it fully. So variable production overhead. So over. Good. So you add it, and this is what you mean by total variable cost. So total variable cost. So anywhere you're looking for variable cost, sum all these 3 items. Like I said, it's not compulsory for the examiner to break it down for you. They can just give it to you for the book. You are done. Good. Just that we have production and then non-production. Production and then non-production. Good. So, and then we also have fixed cost. So that is it. Okay, so that is fine. Good. Now, yes, this one will be good. So when we get the selling price and we less the variable cost, we get the contribution of what? Contribution of what's the name, Grab? 6 Ghana cedis. That's the contribution. Have you seen it? So I am building some points here. Let's assume that our fixed cost is 50,000. Let's just assume that the fixed cost is 50,000 Ghana cedis. Good. Our fixed cost is what? 50,000 Ghana cedis. I don't like the figure. Not at all. I don't like the figure at all. So let's assume it's 54,000 instead. 54,000. Okay. Now it is 54,000. So now let's see. Now we are going to prepare profit statement. This is the total fixed cost. Here too, it's made up of what? Composition of fixed cost. We can have admin, administrative, selling and distribution costs. Such costs are fixed. So examples are fixed overhead. Example, admin. In fact, I shouldn't even talk plenty. All the costs that you see in operating costs over here in management accounting, they are fixed. Good. So admin, and then admin and general overheads. Example of fixed costs. That's 1. 2. Can have selling and distribution costs. Selling and what? Distribution cost. Finally, plus the fixed production cost. Fixed production cost. Good. So the production cost that we are talking about under break-even session must include all this. Yes, that's the fixed cost we are talking about under the break-even. So here too, as usual, they can give the breakdown. Maybe general is this, admin is this, one is this, but you don't want trouble. We summarize everything and give you the full figure. So that's what I'm doing this. By subsequent question, I'll not do that. So take note. Okay. Now, we are going to prepare a financial statement with this information. On the sorry. I think I've cleaned it too. I want some space. Let's clean here. Now, prepare the operating statement. Admin, general, selling and distribution, and the last one was the production overhead. Please, the third one I clean. I want to clean it too. Is a fixed production overheads. This one is selling and distribution. So if I can take it off, and then we continue the game. Good. Please get every part of it too. 6 service name, special name. We call it contribution. Contribution. So in short, contribution is equal to sales minus what? Variable cost. Wow. This formula should not depart from you. It must be with you daily and meditate upon it day in, day out. Okay, good. That'll be fine. Like a word of God. So fixed cost. The fixed cost is 54,000. So fixed cost is here. Ghana cedi of 54,000. Good. We are done. Now required. You are required to prepare profit statements on the following. Prepare income statement. Required. But I've not even started the game. Not at all. Required. Prepare income statement if the company produce. So prepare income statement if the company produce 1, 8,000 units. 1, 8,000 units. 2, so prepare the income statement or operating statement or profit statement. They mean the same thing, no? Income statement, profit statement. This is a management topic, so we use the management terms. Okay, I should increase the volume. Sorry, let me switch to the microphones. Good. Please, is it okay now? Good. Prepare operating statement, which is the same as what? Profit statement or income statement. That's the term that we will use. At the unit of activity level, prepare income statement. Income statement. When the production and sales unit, when a unit produce and sell, or when the sales unit, let's make it sales unit, sales, so nice. Or the sales unit, okay, what the sales unit, yes, is, first of all, is 8,000, 9,000, and finally 12,000. Good. So we are going to prepare operating statements. So look at how we are going to prepare the operating statements. Though there are a lot of shortcuts to go by. So now I get a question before we start the actual game. So let me quickly go straight forward and prepare the operating statement or the income statement. So at the various units, 8,000, 9,000, 12,000, and what? That's all. That's all. Now let's go straight to the game. Let's go straight to the game. Let me clean the top. I'll come back to it. The heading, so I'll do it then. I'll not clean the question. The question will be there. Oh, I've already cleaned the selling price. The question will be there. So solution. Don't forget the name of the company on top. Brazil Limited. ACIB Limited. ACIB. How do you spell ACIB? ACIB Limited. Somebody be. Hey, ACIB. Yes, ACIB Limited. Trouble. Don't mind us saying the way that we use. Profit statements. So that's income. It's an income statement, right? Income statements. So income statements. Please, management account is tailor-made, unlike financial reporting. So income statement. At what? 1, you start the 8,000 will be here. When they produce 9,000, and when they produce what? 12,000. You are preparing profit or loss when the company produce this. So we will start. Yes, we will start again. Now, when the company produce 8,000, what do you think will be the sales revenue? Sales what? Revenue. I don't like small stuff, no go there. Sales revenue. How do you get a sales revenue? When we sell one, the price is 10 Ghana cedis. Now we are selling what? 8,000. So therefore, what will be the revenue? Total revenue. So it's equal to the unit times the selling price. What's the answer? 80,000. Perfect. So I like that. So 80,000. Yes. Over here will be what? 90,000, because to be 10 Ghana cedis times the units. How we get it? These are units. So you can bring unit here, unit attached to it, unit. Good. And then these ones are Ghana cedis, Ghana cedis. So if the selling price is pegged at 10 Ghana cedis, I sell 9,000, I'll get 90,000 units. This one is unit to you. So 90,000 Ghana cedis. If the selling price is at what? 10 Ghana cedis, I sell 12,000, I'll get 120,000 Ghana cedis. Now let's continue. Variable cost. What is a variable cost? No shortcut to write it in full. Variable cost. The variable cost is what? 4 Ghana cedis per unit. So how do you get a variable cost to? Multiply the variable cost by the 8,000. Then you get 32,000, right? Good. You put it in bracket because the cost. All costs we will subtract, except for if you are reversing it. Good. So that is it. Now, what will be the variable cost when you produce 9,000 units? So that will be 4 by 9, which is what? 36,000 Ghana cedis. What if you produce 12,000? So 4 by 12,000. Good. 48. Seems like for those who have been giving me figures, they didn't come to. Good. So what will be the contribution? Contribution. Yeah. Now the contribution will be what? This minus this. That will give us 40 something. Any answer for me? Okay, let me do the calculator. Good. 48,000. I like that. Let the answer flow. And then that of when they produce 9,000, what will be the contribution? At least how we are doing it. Good. Before I'll start the actual game. Units, I think I have to write in full because I can see some confusion coming in. Good. Okay, so 54, right? I like that. Something will happen. 54. Good. The last one, 72. Perfect. But if you get it like this, I'll be fine. I'll be saying that this topic is an interesting topic. No wahala. No troublesome. It's an interesting topic. So it's probably at our level, not the higher one. Now, how do you get profits? Is the contribution less fixed cost in management, in marginal cost approach. To get a profit, don't worry, subtract the fixed cost. So what's the fixed cost here in this question? The fixed cost was given to be 54,000, and I will explain the composition of fixed cost. So it's likely for you to go and see the breakdown of fixed cost. When you go and see the breakdown, you do justice. Just that the subsequent questions ahead of us, they are breakdown, so don't need to worry. Now the fixed cost is 54,000, agreed. It's 54. So bring it here, 54, and you less it. So let me clean this section, just the selling price. Now we know the selling price. Let me just take it off. Here's 54,000. You less it, here's also 54,000. So what's the net profit? The net profit is the same as the profit or loss. So they are getting what? First year, or when they produce 8,000, what will be their profit? 6,000 negative, Okay, so 6,000 negative. What's the profit here? When they produce 9,000, the profit will be what?
9,000.
The profit will be 0. I like that. But 0. Is that 0 or O? 0. That is good. What about when they produce 12,000? I like that. 18,000 and good. So 18,000. Double underline. Now, everybody to understand this, what we've done. Very important. can't go away with it without this topic. I have to understand this, even though I've not started the game. Now let me go straight forward and start the game. Good. Now, tell me, at what unit did the company make no profit or loss? At what unit? At what unit? No profit, no loss. At what unit? At the 9,000, the profit is 0. Good. So this is so you call this one break-even unit. No profit, no loss. Perfect one. So now when they produce 9,000, their total revenue will be equal to their total cost, no profit. Good. So that is it. Now, how did you know that it's 9,000? Yes, 0. What if we did not ask you this question? We still ask you. We did not give you this detail that when they produce 9, 8,000, 9, and 12,000 respectively. So calculate the break even. Now there should be a way. So to start the topic, break-even analysis is nothing by, we call it cost, volume, profit analysis. Another name for break-even. Good. Now, when someone works and the person is like doing the walking, what's the name? We call it walking, right? Good. So if you eat and are eating, it's eating. Trouble. Now, when someone is analyzing, assessing that, okay, if I produce 8,000, what is my total revenue? What is my total cost? And what is my profit? What if I produce 9,000? Such person is doing what you call CVP analysis. So cost, volume, profit analysis. Okay. So to define CVP is the analysis that we normally conduct to determine the changes. How does changes in output and good. Output is also called volume. When we hear volume, it means volume, the quantity. Another word, quantity. Good. So these three words are the same: output, volume, quantity. Units. Let me also add unit to it. Good. So CVP simple means how does changes in output or changes in volume or changes in quantity produce and sell or changes in sales unit affect how does changes in output, volume, or quantity or unit. So let me make it this way. How does changes in output affect one, your revenue, affect sales revenue, sales what? Revenue, cost and profit. So when somebody is conducting analysis that, okay, if I produce 8,000, my profit is loss. I had a loss of 6,000. If I produce 9,000, I get a what? No profit, no loss. But if I produce 12,000, my profit will be 18,000. Then such person is what? Is conducting what? Is doing break-even analysis or CVP analysis, cost, volume, profit analysis. How that changes in the output, the unit, 8,000 change to 9,000. What is fed on the profit? Now is 0. 9,000 change to 12,000. Now is what? 18,000. So when you are doing this, you are doing what you call break-even analysis. Perfect one. Good. So now I'm done. Now let's key in some few assumptions. There are so many assumptions. Before the break-even works, we have the assumption that we have to take note of. So after that assumption, then we actually start the calculation. Good. Now, assumptions of break-even. We've made some assumptions, just familiar yourself with it. just familiar yourself with the assumption so that you good. So I'll come to this question again. I'll not claim it. For the assumption, write it. 1, it assumes that production is equal to sales. That's assumption 1. The assumptions, my board is full. This one, I need it. I don't know calculate it. Assumption 1. Breakeven assumes that production is equal to what? Sales. It means no closing inventory. There's no closing inventory. Although in reality, it's not true. Businesses sometimes keep closing inventory. So that's the first assumption. It assumes that production is what? Is equal to sales. It assumes that the production is equal to sales. Production is equal to sales, meaning no closing inventory, no inventory, and a break-even. Assumption 2, it assumes that the selling price and the variable cost per unit are constant at all levels of activity. So the selling price, you realize that the selling price was 10 cedi. When we produced 8,000, we still multiplied by 10 Ghana, we had 80. When we produced 9, we still multiplied by 10. We didn't change the selling prices. Good. So that's the first assumption. That's the second assumption. It assumes that the selling price per unit and the variable cost too. Yes, that one didn't also change. The variable cost per unit didn't also change. That one was what? 4 cedis. So the same throughout. How we get that? Good. So it assumes that the selling price per unit and the variable cost per unit do not change. Please, in exams, sometimes the examiner may ask you, state the limitation or challenge of the break-even analysis. In that, the examiner is asking you for the assumptions. In reality, none of the assumption is true. So all the assumptions are wrong. So if you want to get a limitation, just quote the assumption and add, in reality, it is not true. Yes. So in reality, your selling price may change at the level of activity. Sometimes when you produce, the more you produce, you lower the selling price a little bit, at least, to allow people to buy more. Good. So that is it. And the variable cost, they are saying that it's also fixed. It's also constant at all levels. Down to it's not true. Good. Now, the third assumption is that the fixed cost is constant at all levels of activity. Yes, fixed cost is constant at all levels of activity. You can realize it here. 54, 54, 54. By fixed cost, it's not fixed always. Yes, fixed cost is the cost that remains unchanged between a relevant range. Fixed cost, as we say, costs that do not change. No, that statement is not true. Fixed cost is a cost that do not change within certain range. Let's assume that I have rented a shop or a place to do a class. No, not a shop, will not go for a class. Maybe a classroom for a special intervention. The one coming on it on, let's say, Thursday. And then I'm paying a rent of, let's say, 1,000 Ghana cedis per room. I've rented, let's say, just a room to do the class. Now, that 1,000 Ghana is not coming in. Okay. 1,000 Ghana is not coming, sorry. Now, let's assume that the room can contain only 70 students at a time. So it means that from 0 to 70, the rent is what? 1,000 Ghana. That's fixed. It's fixed. It's only fixed. If I get 1 student, I'll still pay the 1,000 Ghana. If I get 2 students, 1,000 Ghana. If I get 70 students, 4,000 Ghana. But what if I get 80 students? When I get 80 students, the fixed cost will no longer be 1,000. It will be what? Then I'll ask the landlord that, please show me, do you have any room which can contain 80? You go, yes, but that one, the price is a bit higher because of the space. So instead of them taking 1,000 Ghana, they'll end up taking you 1,500. Is it fixed now? It has varied. So please, fixed cost is a cost which is what? Fixed for a particular range. The range of output, your capacity, we call it capacity. Good, your capacity. Good, so that is it. So here they are saying this fixed cost remain constant at all levels. What if you increase your capacity? Your fixed cost will increase. So reality is not true. So that's the assumption. The last assumption I'll probably discuss with you. There are more. I'm discussing only few. There are more. So look for the remaining ones. I think it might be in the handout or so. Yeah. It assumes that cost can be classified only into two, variable and fixed. In reality, it's not true. Can have step-up costs. Yes, cost can be only be classified into two. If it's not variable, then you are fixed. So that's why we have the variable cost and fixed cost because of that assumption. Good. So all the costs. So here it includes both production, variable production cost and non-variable production cost. Fixed cost to fixed production cost, non-fixed production cost in that order. There you are done. Now, there was one B. Okay, that one I don't want to talk about it here. Good. So let's move on. Now, I've been in this calculation. There's a smartest way to do this calculation. To know that when you produce 9,000, you are going to break even. There's a straightforward approach that you don't need to do all this. What if 9,000 is not part of what I gave? Maybe here was 9,500. So do that, do not give us 0. So unless we calculate, do a guesswork. What if you produce this? What if? What if? So that's what I call it for what if analysis. So if you calculate by the time you finish, you get the answer. And then time is gone. So there must be what? A straightforward approach. So please hear me. We are going to do the formulas. It's a formula work. So I will key in the formula for you. Then we'll use it and it will give us the same answer. Good. So starting single unit, break even for single unit. Today we're not doing detail work. So break even, we have what you call break-even points. Now with break-even points, but if you draw a graph, point linked here, linked there, right? So think that there must be two coordinates. Yeah, there must be two coordinates there. So break-even point means in units, and then we have it in value. That's the sales revenue. Sales revenue. I think I'll come to that one when we are done with this. Good. Now, break-even units. That's the unit that you have to sell in order to break even. That one is equal to the fixed cost. Just relax. Bring the fixed cost and divide it by contribution per unit. Contribution per unit. Good. Where contribution per unit is equal to the selling price less the variable cost. All of them too must be per unit basis. The contribution must be. So that is it. So to calculate this from the question, the fixed cost is what? 50,000. What is the contribution per unit? The contribution per unit is the selling price. This was the 10 Ghana cedis less variable cost of 4 Ghana cedis. Good. So this will give us what? What is the answer? Good. So what's the answer? Oh, the fixed cost is 54. Sorry, so sorry. The fixed cost is 54. Thank you, but not the 50. Okay, so therefore, you get 9,000 units, right? Good. I want everybody to do it though. So therefore, 9,000 units. Agreed. Good. Agreed. This hope is 9,000. So it means that when we produce 9,000, our profit will be 0. And this is a confirmation, 0 profits. 0, confirm. Now, we are not going to use this approach again. This one's a long way. Now, this formless, that's the one that's going to work. So, fixed cost, break even in units. What unit must you produce and sell? What unit must you produce and sell so that you can break even? That one will be what? Fixed cost divided by contribution per unit. Now, contribution is nothing by selling price less the variable cost. Then you get your what? Your unit. Then you also have it sales revenue. What will be the sales revenue before you can break even? What will be break even sales unit? Now, when you mention break even point, it means two items. One, unit. Two, value, the sales value. This will be the unit there, and this will be the value. So what you've done so far is what? The unit. How do you get a value? To get a value, multiply the unit by the selling price. You get a value. Anytime you're looking for value under this approach, under this topic, break even, just get the unit and multiply it by what? By the selling price. Although there's an alternative. That's good. Any question? No. So let's move on. So let's get a break even value. It means that what will be the sales revenue before they can break even? What will be the sales value, the sales unit? It will be this 9,000 times the selling price. So we come here. That one, let me do it where it's not going here. I don't want to clean the other side. Let me do it here. So continuation. Break even value will be equal to, you're right, break even units. So it's equal to break even unit times the selling price. No shortcut in exams. Times the selling price. So the value will be, break even unit is 9,000. Selling price is what? 10 Ghana cedis. So therefore, it's 90,000. You are done. So the sales revenue there too was what? Was also 90,000. If you check, it was also 90,000. Then you are done. I am done with the first show. So this is a break-even point in value and then in sales. Break-even. Good. So now I can now clean the big formula from there, the big table. Okay. So now let's see how best we can do this. Let's go up a bit. Now, there's a second solution. So we are going to the formulas. In fact, the formulas are not many. You need to know only three. There are only three. That's all. Three. We are done. Only three. Only three. Huh? Only three. So you should also know contribution to sales ratio. Contribution to sales ratio. For those of you who have done ratio before, then you will call it contribution margin, right? Contribution margin. Margin ratio. Good, they are the same. This and this are the same. Hey, sorry. Sorry. The top of the body is not coming. Sorry. Forgive. Okay. So it's contribution to sales ratio. It's also called contribution margin ratio or PV ratio, profit volume ratio. In short, we call it CS ratio. Now, this one is straightforward, the CS ratio. Sales, contribution to sales. So it must be contribution over sales times 100. We learned that in ratio, anything margin is that item over sales times 100. I'm a margin, I'm over sales times 100. Contribution to sales ratio or contribution margin, contribution over sales times what? 100. That's all, you are done. Here you can have it in units or in total. So per unit basis, all the answer will be the same. So here what's the contribution? Here the contribution is 6 Ghana cedis. What's the selling price? 100. So selling price was 10 Ghana cedis times what? 100. So this is equal to 60%. I am done. 60%. That's perfect. Now, break-even units. Now the only one formula, this one, good. But the break-even value, there's an alternative formula that I'm going to give. Then I'll move on. So the break-even sales value, how to get this 90,000? It's nothing by dividing the fixed cost by the CS ratio. Good. So after you get a CS ratio, in fact, it's a very popular ratio in management accounting, CS ratio. So therefore, break-even sales value, sales value is nothing by the fixed cost divided by the CS ratio you attach. So what is the fixed cost? The fixed cost here is still 54,000. What is the CS ratio? We have 60%, so that will be 0.6. I am done. Please, what is the answer? The answer will be what? It must be the same as what we have here. This 90,000 that we had, it must be the same. Yes, that's alternative. Good. So now you have two formulas for one item, right? Good, so that is it. So here to give us 90,000. Perfect. So that's the 90,000. Good. I'm done. I am what? Done. Okay, perfect. So to confirm, yes. So I'm done. So this is the second formula, right? So far, only two formulas. So okay. This one I don't want to be part of because this one's a ratio. Now let's move on. Good. Now let me dash the board. Can't let me know when I done copying. I want to dash the board. And then start knitting. To see if we can. And then get the formula. Yes. Then get the. That's all. When you break it down, how to. That's the next question that we will do. That I'll give you. The sales value, break-even sales value. We said that the break-even sales value, the traditional formula or the normal formula that we use to calculate is equal to the budgeted sales unit, sorry, the break-even sales unit. So break-even sales unit times the selling price. That's what we know. And then here there's an alternative formula that we use to calculate. The alternative is just relax. Take your fixed cost, divide it by the CS ratio. You are done. You are well sorted out. Good. So you take your fixed cost of 54,000, you divide by 0.6. It will give you the same answer as we do this. Why am I giving you these two items at the same time? That I know that these two things will get the same results. It's because sometimes the selling price might not be given to you. Yes, the selling price might not be given to you. If you don't have the selling price, you cannot use this approach. Then you'll be forced to use this. So that's why I'm giving the two to you. CS is the contribution to sales ratio. CS ratio. Good. So that is it. Contribution to sales ratio. And it's also called contribution margin ratio or profit volume ratio. It has so many names. You can also call it PV ratio. PV ratio. But for your case, you have to know just the CS. You know in CS, it's okay. You know in CS like this, it's okay. That's all for your case. Okay, please, who is confused here? Good. So the issue is this. CS ratio is nothing by your contribution divided by the sales. That's all. Now the contribution, we had 6 cities coming from the first illustration. Agreed. Why the 6 cities? Because the selling price was 10 Ghana cedis. Variable cost was 4 Ghana cedis. So the contribution will be what? 6 Ghana cedis. Contribution is nothing by what? Nothing by the selling price less the variable cost. You are done. So contribution is 6 cedis. Then CS ratio, contribution to sales ratio, it will be 6 divided by the 10 times the 100. That will give us the CS ratio. So we have to take note of that. Okay, please, which side are you not getting it? Let me know. Madam Joy, which side are you not getting it? Let me know. Good. So that is it. Please get it too. I'm not going to start my dinner. Yes. That's how I'm running fast through this so that you get it. But that is why you can't understand what you're going to do next. So that's why you have to get this one first. Okay. So okay, then that's fine. So that's the CS ratio. So that's the alternative. Now can I dash the board? Onto that's the board. Everywhere. Everybody is right done. Good. So this was the first thing that we did. So I can start from here. So the first thing that we did. I think I'll forward you with the formulas. Just that the formulas are many, but you don't need all the formulas. So I have to be selective and give you the few formulas. Those that the three that you need. Good. Now we are continuing the game. There's what we call units. Unit to be produced or sold. Need to be sold in order to earn, or unit required to earn a target profit. Let me make it simple. It's not unit required. Please, the required can be unit to be produced and what? So before they can get this. Unit required to earn a target profit, to earn a target profit. We also call it a desired profit. So the question is then, yes, it's correct. Is break-even sales value. Okay, I think I have to be careful with my formulas. Yes, I have to be careful with my formulas. So for the sake, let me reproduce the formulas back again. Break-even, just only the formulas. Break-even point. You have each unit. Point means units and value. Unit is equal to the fixed cost of a contribution per unit. And then the value, the first formula, formula 1, is equal to the break-even unit times the selling price. Break-even unit times the selling price. Break-even unit, I think that's right. This one I'm trying to before. Break-even unit times your selling price. That's the value. Good. Second formula, formula 2, is the fixed cost all divided by the CS ratio. Good. So these are the formulas that you should, so far, these are the formulas that we know. Good. How we get it? Clear? Clear, clear? Good. Now, unit required. This one. Yes, contribution is sales minus variable cost. Sales minus variable cost. Good. CS ratio. Good. So perfect. So that is it. How we get it? So the one who posted. Good. That's fine. Now, sometimes we ask you, what will be the unit? Or if we want to earn a target profit of 10,000, then how many units should we produce in order to earn the target profit? So take notes. So we call it unit required to earn a target profit. Unit required to earn a target profit. Unit. I normally call it break-even at target profit. So unit required. Now it means that it will increase the unit, right? Oh yes. Because when you calculate the break-even unit like this, the break-even unit, it is 9,000. This is the implication. Anytime you produce below 9,000, it will be lost. And then typical illustration is what we had, a loss of 6,000 when they produce 9,000, right? So when they produce 8,000. Anytime you produce above the break-even units, which is the 9,000, you get profit. So if you produce 12,000, there's a profit of 18,000. Now, this company wants to get the profit of, let's say, 20,000. They want to get a desired profit. We call it target profit. Target what? Profit. Good. How do you calculate? How do you determine the unit that the company should produce so that they can get their desired profit? Because here we know that when they produce 9,000, their profit is 0. So now, if the profit that they want to desire, then it means that we just have to add the target profit to it, and then we are done. So the formula will be like this. So like I said, these are what purely formula works. So the required unit is equal to, so the fixed cost plus the target profit. That's the TG. Target profit. Please, target, not my name. Oh. Not my name, target. Not my name, target. The target profit. Like your required margin, your desired margin. Oh, consultant, please, we want to get profit of 5 Ghana cedis. What will be the unit that we should produce? Okay, so that is the target profit that we are talking about. Good. So all of this divided by what? By the contribution per unit. Here we say units, so it must go with the contribution per unit. But if you want revenue, what will be the sales revenue to earn a target profit of? The top is still the same. So that's why I come and pick this. You divide it by CS ratio. That's all. Anytime you want units, please divide it by contribution per unit. Anytime you want value, divide it by the CS ratio. That's all. You can see that the value, to get the value, is the fixed cost over CS ratio. So the same way here, if you want to get the value of this unit, you can also divide by the CS ratio, then you are done. Don't worry, we will go through all this. Please, this profit, it must be profit before tax. Target profit before tax. Take note. It must be before tax. That profit must be before tax. That profit must be before tax, not after tax. If the examiner give you after tax, find a way of getting the profit before tax. We will do that. So probably we can test ourselves with this. Okay, so now let's go through the same data or the same information. Assuming that the company wants to achieve a profit, a target profit of, or a desired profit. If a company wants to achieve, I'm adding some to it. So assuming that a company wants to achieve a desired profit, I don't use the word target because there's no use target. Other name is desired required margin. Let us say the profit they want to achieve profit of, let's say, 50,000 Ghana cedis. You want to achieve a profit of 50,000 Ghana cedis. If they said this without anything, you to work it without anything, just work it. No before tax or after tax. Assume that it's the before tax. Okay, the video is slow motion, eh? Okay, to be fine, to come back to normal. Okay, so now let's see. So the required output. So what must be the unit produced so that they can get the profit of what? 50,000. The formula is relax. Take your fixed cost. Add whatever profit they want to achieve, the target profit to it. You are done. So the target profit here is 50,000. It's also called desired profit. It's also called required margin. So that will give us, so the unit required is equal to, fixed cost is 54,000 from the same question, plus the target profit of what? 50,000. Whichever the target profit is, bring it. Divide it by the contribution per unit, which is what? 6 Ghana cedis. That will give us what? The answer. Hey, this answer will give us something. Some plenty point too. I don't like the point. This answer will give us points. I don't like the point thing. I don't like the point. Please, I'm changing things. I don't like the point. Sorry, I don't like the point. Hey, now that it will be point too. 7,000. No, it should be more than 110,000. Okay. Oh, this point, please. Please, I'm not comfortable working with point, so let's do something. Which figure got that so that the point will not come inside? This figure 52, okay, let's manage 52. Let's manage 52. Where's my calculator? 52 plus 5, 5, 4, 12 by 6.2. Let me use 45. 45 plus 54. Oh, no. Okay, so I've gotten one 45,000. Sorry, I don't like the point. Though it's an answer. The 45, not the point. So 45,000, 99,000. 99,000 divided by 6 will give us, yeah, 16,500. That one is okay. Good. So 16,500. How we get that? Please, who don't get this, so that I'll go back. Because I'm about to wrap up with 1 or 2 stuff, and we are done. Then we resume the question solving and solve the specific questions, and then we move on. Obviously, there's the good news. So this one is not plenty. It's not plenty. So don't worry at all. So if you have any question, you can let me know.
What do you say? The percentage, like what did the CA was percent? What did he ask you that if you want to go to that 100%?
That one we will not use the CS ratio. The CS ratio might not be the capacity. Good. Now they will tell us the actual capacity. They will work with it. Their working capacity. Good. I think there's a question like that in what I'm going to solve today. Please, any question for me? Any question for me? So I think that they have to produce 16,500 units. When you produce 16,500, you will get a profit of 45,000. That's the implication. Okay. Now, have you seen that this question? I did not bring any tax inside. So, have you seen how you solve it? That's supposed to be good. But when the issue of tax pop up, this figure must be profit before tax. But if the examiner did not state anything, you leave it like this. Now, assuming that this 45,000 is after tax, how do you calculate it? It will be some shishio, some trial here. Now, assuming that the after tax, assuming that this profit is after tax, meanwhile we want the profit before tax. So what do we do? So how do you convert it? They have to give you the tax rate in the question. They will give us the tax rates in the question. Good. So let us know the tax rate is 30%. Let us assume that the tax rate is 30%. Wow. Good. Now let's continue. Please, how we get it up to this point before I start the massage? What if you introduce tax? This profit is after tax. They put a question, what will be the unit they should produce in order to earn a required or a target profit after tax of, let's say, profit after tax of 45,000. But the tax rate in the question, assuming that the tax rate is what, 30%. The company paid tax, so tax is 30%. Now this is the meaning. It means that good. This is the meaning. Wow. It means that this is profit after tax, which is 45 million. I don't use the 45 million. Let me use a different figure. No, I'm not changing it again. What will be the unit that the entity must produce and sell in order to earn after tax profits of, in order to earn what? After tax profit of, I don't use the 45, that's the A. So let me go to the B. To earn after tax profit of 40,000. After tax profit of what? 40,000. If the tax rate, if tax rate is what? 30%. Good. Now this is the meaning. I want you able to do it for me. The profit after tax is 40,000. Profit after tax is 40,000, but the tax rate is 30%. Tell me the profit before tax. The person that will get the answer correct will be the accounting kaka for the night or for the day. I hope you get the question correct. The profit after tax, so after tax profit of what? 40,000. The tax rate is 30%. What is the profit before tax? I like that, 28,000. In fact, I like the answer. In fact, I like it. Please, what about your own? In fact, any answer, don't forget the rule. Any answer is valid until the final marking scheme is revealed. So that 28,000 is correct until the final marking scheme is revealed. That 28,000. This is profit or hey, there's a danger here. We are looking for profit before tax. This is profit after tax. Good. There's a danger. There's a danger here. 52. I like that. Hey, you added the 20 plus 23. I like the 52. I like the 52. But any answer is valid until the final marking is revealed. In fact, who will be the accounting cracker?
Profit before tax.
Before tax. Who will be 52,000? That will be this one. Okay, I like that. Accounting cracker for the day. Now let me give. I like that. Now let's assume that we are working. We had profit. Profit before tax is 1,200 Ghana. Our tax is 30%, so we quickly calculate 30%, so 0.3 times 1,002, which is 360. Good. So I took the 360 out. Profit before tax is what? 28. I like that. In fact, correct. But any answer is correct too. I think the final marking is finished. Don't worry at all. So this is profit after tax. So profit after tax will be 1,200 less the answer. That is 840. This profit after tax. Yes. Now the issue is this. I've given you profit after tax. After tax is equal to 840. Tax rate is equal to 30%. Now what is the profit before tax? So how you calculate, how you had the 52, 67, the 28, please do the same thing to work. If you get 1,200, score yourself 100%. Wait, how we get that? So how do you get it? So now, I'll give you two options or two methods. This profit after tax is net of tax, right? The tax rate is at what percentage? Is what? 30%, right? No, we don't need any information. This information now is okay. Yes, this information now is okay. Yes. Now, the profit after tax, it represents net of tax. If the tax is 30, then it represents what? 70%. So the profit after tax will be 70%. Now the 70% is giving us 840. What are we looking for? The profit before tax is always 100%. So therefore, we are looking for 100. So 100% will be what? We don't know. Question mark. So that is the game. So we are looking for what? 100. So in short, we just take 100 divided by what? 70 times the 840. Times the 840. So it will be 100 divided by it will give you the 1,200 straightforward. How we get that? So 100 divided by the 70 times the 1,200. Wait, times the 840. Please, how we get that? It is data. No. So you see that I get 1,200 back. Now the issue is this show. Please let me start the whole show again. Our profit before tax. This one is assumption. No, it's a guesswork. I've guessed any figure, please. This one I've guessed what? Any figure at all. It's 1,200. Our tax is 30% on this. We have 360. So what's the profit after tax? Yeah. The profit after tax is what? 840. How everybody get this? Please, how we get it? Good. Now, how can we locate this 1,200 with the help of this 840 and this tax? And we are saying that the profit after tax is always the net of tax. The profit before tax is always 100, and the profit after tax is net of tax. So if the tax rate is 30, it means that the profit after tax will be 70%. And this 70% is equal to 840. Agreed. Now, if it's equal to 840, then what will be the profit before tax? That one is always 100%. The profit before tax is 100. So 100% will be equal to a question mark. We don't know. So let's find it. And then you go by your ringing tone. If more, less you divide, and if less, more you divide those items. I don't want trouble. It's nothing by you picking what you want. I want 100%. So it will be the 100% divided by the net 70% times what will be given. They give us 840. Good. So realize that when we do this, it will give us the answer. This answer. It will give us exact the 1,200. That's the profit what before tax. So this answer is equal to 1,200. Wow. So it means that the 1,200 is not coming. It means that we are able to produce the 1,200 back with the help of the 1,000. So take note. So now let me come back to the question. I hope everybody get it. I hope everybody get it. Please, I hope everyone get it. Okay. Now, you have to set your own question. Yes, I'll help you to do that. Give me your own profit before tax, your own figure. Any of you, your own figure. 1, 2, 3, your own figure. The last messages, yes. Any figure at all, your own profit before tax. Profit before tax. No, I don't want to solve the question. The question is yours. Okay. Hey, you are using the 40,000. You are using the question. I don't use the question.
This one, the
Let's see the different figure. Oh, it's profit after tax. They say after tax profit. They made it clear that it's after tax profit. So let me do that one here for you, and then you'll be fine. Good. Let me clean this section. Let me clean the format. Good. Now, if selected was 34,000, right? Any figure at all, select your own figure. 34, 34. I'll go in for the 34 because the 40,000, I'll be giving 40,000 here, it should be different. So now, your profit before tax is profit before tax. Is what? Before tax is 34,000. Good. Agreed. It is 34,000. That's the profit before tax. How we get that? Good. Let's assume that the tax rate is 30%. What will be the income tax? Tell me. What will be the tax? The last 3 people to respond. The tax will be what? Okay. The tax will be, everybody should respond, especially the last 3 people. Yes, those will not get. I'm waiting for your own though. I'm waiting for. Hey, he selected 3,400 and I choose 34. Okay, good. Please, good. Galazi. Please, those who are not getting it, I want to answer before I continue. I've not seen your answer. 2 of you have not responded. Please, those who have not, good. Good, I'm waiting. Okay, if you see my high, I want answer from you. Please, which section? These figures are imaginated figures, our own figures. That one is our own figures. Wow, interesting. Don't worry, you'll be fine. You'll be fine. Here we are choosing our own figures. Just select your own figures. Your own figures. We selected 34. We are just assuming that we are calculating trading profit and loss, starting from sales revenue, cost of sales, gross profit, and now we have reached profit before tax. Good. And we are assuming that the tax rate is 30%. If the tax rate is 30%, and then our profit before tax is 34,000. Our profit before tax is what? 34,000. What will be the tax? So that's what we are saying. So tax is nothing by the tax rate you multiplying by what? The profit before tax. I hope you get that. Good. So please get it for me. This figure is not coming from any book. It's a magnetic figure. Any figure at all. Profit before tax. You selected 40,000 because the 40,000 is here. I don't want to pick that 40,000. That's why I picked the 34,000. Good. So please, if the tax rate is 30,000, what will be the income tax? You've made a profit of 34,000 and you are paying tax at the rate of what? 30%. What do you think will be the tax? So kindly calculate it for me. What will be your tax? What is the income tax?
The income tax.
Yes, the income tax.
That is PBT.
Profit before
Tax.
No.
Is that what we are looking for now? Or okay,
we are looking for the income tax.
Okay.
The taxes. So I'll open my bracket like this. Tell the examiner that if my profit before tax is 34,000, then the tax is nothing by this 34,000 times what? 30%. Which is 10,200. Good. Please, I hope you get it. Hello. Please, I hope you get it. So can you pick the calculator and then let's see. Multiply it by the 30%. Good. I'm waiting for your answer. Yeah. Now, what will be the profit after tax? If it's before tax, this is a tax. Profit after tax is what? Please, this one is management account, not financial reporting. This one is management control. You know it's financial reporting paper. So the profit antipart, profit after tax. Antipart will be, who can tell me the antipart? Okay, is there? So antipart will be, so for those who are not getting, please type, let me see if it's okay now. For those who are not getting it, I want to see your answer. I want to see your answer. For those who are not getting it, kindly let your answer come. Hello. Please, what do you get? Wow. What's the profit after tax? Hello. Okay, let's move on. Why 42,200? We are less in tax. We subtract income tax expense. Go. So income tax expense. So good. So what will be the profit after tax, after net of tax? So let me see the answers again. Net of tax. Hey. Okay. Good. So the answer will be what? 23,800. Agreed. Good. That's the profit after tax. How we get that? That's the profit after tax. Now, if this profit after tax, please, it's representing 70%. The profit before tax, it's 100%. So this one is equivalent to 100%. And then the tax is equivalent to 30%. So therefore, the profit after tax will be what? Tell me. Who can tell me the percentage of profit after tax? If you can tell me the percentage of profit after tax, you can tell me. So the percentage of profit after tax is 70%, right? Perfect. So 70%, that's the profit after tax. So now the question is this. Good. Now the question is this. Assuming that I clean this figure from there and I ask you, produce it. This figure is not given to you. Produce them back. What do you do? Okay, then you tell me that if 70% is equal to 23,800, then what are you looking for? If you are looking for the profit before tax, it's 100%. That will be what? Question mark. Then you solve. So if 23,800 is equal to 70%, then 100% will be what? Question mark. Then you produce it. Good. Again, if 70% is equal to this, then 30% will be what? That one, you are looking for the profit after tax itself. Sorry, the tax itself. Good. So please produce them back for me. So if, so you write, if, okay, let me do it here. So small one like this. Let's use new marker. Okay, so if the 70% is equal to 23,800, what are you looking for? Then 100% will be what? Question mark. We don't know. So I make it X. So calculate it for me. Let me see. I need an answer from two people. So I'll say you hi. When you see my hi, I need my answer from you. Hey, 33,999.9. It means that you are using this calculator. You are using a phone calculator. You are using a phone calculator to do that. Yes. Good. So I will send you hi. If you see my hi individually, it means that I'm looking for my answer from you. Good. So hi. Good. So calculate. If 70 is equal to this, 100% will be what? Before I give you my formula. So 100 divided by 70. Okay, if you see my height, it means I need my answer. Good. If you see high, it means that I need answer from you. So if the profit after tax is 70%, is equal to 23,800, then the profit before tax, which is 100%, will be what? So that is it. So therefore, you can just make it 100. Oh, wait, what you are looking for? It will be the 100 divided by 70 times what? Times the 23,800. And that will give us, so if 70 is equal to this, then 100 will be what? That's the answer. So here will be 34,000. So you're able to provide the 34,000 here. Good. So that is it. Please, I hope everybody get it. Hello. Hello. Please, I hope everybody get it. Good. Good. So the nearest phone number is 34,000, right? The nearest phone number. My answers. Okay. Okay, good. So that is it. So now let's come here. Let's bring it here. Now that you see the show, I'm going to change things. Oh yes, I have to change things. The company wants to earn after tax profit of 40. They want to earn after tax profit. Now everybody have gotten this. I'm not coming back to the question. After tax profit of 40,000. What if the tax rate, I'm not changing the tax rate, is 25%? Yes, I've changed my mind. For the 30 day, you know it is that, you know the answer already. So, calculate the profit before tax for me. And then we come back to that. Please, I hope everybody get it. Good, 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 good. Okay, so now that everybody get it, I can, that's the board. Good. I can, that's the board. But this is not part of the game. This is not part of the analysis. So therefore, the unit required in order to earn a profit of 40,000, just that this profit we want before tax. Please, this profit, the one given to you in the question is 40,000, but in calculation, you need the profit before tax. It's equal to the fixed cost plus the target profit. Fixed cost plus what? The target profit. In fact, you can also, and this is the 23,800. You can also divide it by 1 minus the tax rate. That's all. In fact, to avoid issue, to avoid confusion, to avoid if 70 is equal to 23,800 and it's, in fact, to avoid issue, 1 minus the tax rate, 1 minus T. Yeah, the tax rate is what? 0.3. No, I think this one will not be no work here. 23. Good. So I think that's it, okay. So it means that this is the approach that we can also use, alternatives, so that you can also get it. Now it means that when I come here, it is the target profit all divided by 1 minus the tax rate. If that target profit given to me in the question is after tax, if it is after tax, I have to convert it to what? To before tax. The video has been on. Good. Now let's see. So it means that to get it, it also gives us 34. So now, don't you worry yourself again. Just 1 minus the tax rate. 1 minus the tax rate, you are done. It will give you. You only do this if this one is the profit after tax. If there's no profit after tax, no tax in the question, don't you worry yourself. Just bring the figure. Like the first question that we solved, there was no tax in it, so we lifted it there and we got it. So take note. Okay. So now let's move on. Let's move on. So here to be, now that it's confirmed, there will be trouble. 1 minus tax, all like this. Then we divide this one by the contribution per unit. So let's see the unit that is yourself, and then you are done. So I've using the formula, you have put it nicely like that. So we've got it nicely. So now it will be equal to the fixed cost is what? 54,000. Now the required margin is what? 40,000. Just that this 40,000 is after tax. We don't want that. We want before tax, but you have given us after tax. So now we have to convert it to what? To be before tax. And converting it, you bring it 40,000, you less 1 minus the tax rate. The tax rate is 30, so 1 minus 0.3. No, it's 25. Like this. So this one alone give us the down. Or if you don't want trouble, like me, if you don't want trouble, like myself, what you do is this. Go and do calculation somewhere and get your profit before tax. So tell the examiner that, okay, if the profit after tax is always net of 100, the tax rate is 25. So 100 minus 25 will give us what? Will give us 75%. So if 75% is equal to this 40,000, therefore, I am looking for the 100%. That will be what? So much. Get the answer. So to be 100 divided by 75 times the 40,000, whatever answer I get, I'll come and then put it in here. So that will be the answer that we get here. How we get that? So you can just single it out and come and do the workings here. So the answer will be, now let's do the calculation. I hope everybody get it. So please, what do you get? I think somebody give me the answer. I think the answer, yes. So to be 100, 40,000, 1, 2, 3. Oh, is it because I changed this one? Is it because I changed the from 30 to 25? Where's the case here?
No, you give me the 30%. That's not.
Point, plenty points. We don't like points. Okay, so let's make it 53,333. Good. So to be 53,333. So when you do this, before you come and then replace it here. So when you come here, you come and then replace it 53,333. Whatever be the case, it must be the profit before tax. Okay, let the tax rate be 40. I think we've sorted it out. Then what do you do? So what's the unit required? So finally, 17,889 units. Good. So that is it. Good. If you don't like this approach, if you don't see these workings, especially this one in your workings, then you have to do this. You bring in the 40,000 here like that. Less 1 minus 0.25. Perfect. So something like this. How we get that? Then the answer, the final answer, you put it down. I believe we've done much with this, so and I hope everyone gets it. So 17,889 units. So it means that when they produce 17,889, they will get profit after tax of 40,000. Yes, profit after tax of 40,000. Perfect. Everyone should help me out with the calculation, and then you get it for me. Good. What will be the revenue? What will be the revenue at this point? Anytime you want the revenue, is a unit times the selling price. If they are going to produce this, what will be the sales revenue? Is a unit times what? The selling price. What's the selling price here? The selling price is 10 Ghana cedis. So therefore, the sales revenue at this point, will be the 17,889 times 10 Ghana cedis. That will give us 178,890 Ghana cedis. I hope you get that. Good. So that is the journey. That's the journey. Good. Gradually, we are coming to successful end. Then finally, I'll talk about margin of safety when we start the actual game. I want us to solve one question. So we are going to solve a 4 questions. I want to do my thing by giving you some to practice for me and see how best we can do. Okay, you the practice one, you send it to. Let me go straight forward. So the game of the day. Let me see if I can do some short 5 minutes, just 5 minutes quiz. Let me see the 5 minute quiz. Where are you? Where are you? Professor, where are you? Good. Professor is here. So now Professor is yours. So let me increase it a bit. Good. So Professor showed so finally we will get a unit of an excess revenue of 17,890. Please, I hope everybody can hear. It seems like someone cannot hear me. Wow. You are off, can't hear. Wow. Okay, you can hear. Okay. Good. So check your end for me if you cannot hear me clear. So this is it. Now, it's your turn to do some. Please, only 5 minutes. I'll take it when it's 6:48 exactly. So kindly take note. Now let's see. Professor is yours. Where is the this thing? But Professor is incomplete. So I have something to try now. Professor, good. Professor is here. If the tax rate is 40%, good. So Professor is yours. Calculate the number of units must be sold if n after tax profit of 100,000. If the tax rate if the income tax rate is 40%. So this one, I name it Professor here. If the tax rate is 40%. 5 minutes, 4 minutes. First, you are calculating break-even point and then break-even units. So break-even point and then break-even unit for me. Second, you are calculating the number of units must be sold to earn an income of 75,000 before income tax. An income of 75 before income tax. It means that that's what we want. We want the profit before tax. Always take note. But if they have given us profit after tax, then we have to do the conversion. Good. Then when we're done, then we go to Brahabeda Hotel. That's our next question. Before that, I think I'll solve one other question. Brahabeda will be a work. Try out. Don't your hands on it. And I'll solve my next question. Good. I have posted some questions on the platform. That's the question that we will solve after this. And then with that question, I think I'll project it, so don't need to worry at all. Good. I'll project it here. If you don't have it, don't worry at all. I'll project it here for you. So okay. So it's your turn to do this. So this one is yours. Good. So the answer will be the first one. You had the first one. We are calculating break even what? We are calculating break-even point. So break-even point. So first of all, in units, I'll quote my formula nicely. The more I quote the formula, the more I remember fixed cost over the contribution per unit. That's the first thing that I'll do. Good. Now, what's the fixed cost in this question? What's the fixed cost in this question? The fixed cost is what?
Fixed cost.
900 and good, 972. I thought, okay, what about the breakdown that they did? So, here's a breakdown. Your total fixed cost. You have to pick the total fixed cost. Divided by what? The contribution. In which you say is equal to sales minus variable cost. Sales of 20 Ghana cedis less 15 cedis. So the answer is equal to 5. So the answer will be 100 and what? 94,400 units. Good. Now let's go to value. So for value, if the selling price is there, what do you do? When the selling price is there, it's equal to the break-even unit times the selling price. So therefore, the break-even unit is what? 194,444 times 20 Ghana cedis. This was after that, so that was. It is 3,880,000. Like this, then you are done. 8 again. 8. Okay, so the 8 are 3. Perfect. So please, this is how I want the solution. I wish it's a bit okay. It's a bit straightforward. At least the first one, let's score it. Yes. That's the A. This one alone is the A. Please get it, and then before I move on, who can compute the CS ratio for me? The CS ratio, who can compute it for me? Sales, contribution to sales ratio, CS ratio. If you want to compute the CS ratio is equal to the contribution, which is the answer for this. 5 Ghana cedis, that's the contribution. All divided by sales revenue of what? 20, that's the CS ratio. So that will give us times 100. So the CS ratio will be what? Good, 25%. Alternative for the value, we said that the value, it can also be equal to the fixed cost divided by the CS ratio. Who used that? Yes. So the fixed cost here is still 972,000, all divided by CS ratio of what? 0.25. The answer must be the same as this if we calculate it. So that is it. I'm now the A part. Is it the same? Good. So that's the alternative. Why do I interested in like the CS ratio? I like it because in the event where they don't give you the selling price, yes, you can use that one to find it. Good. I'm done with the A. I hope everybody get it. Please, I hope everybody get it. The A. Okay, the CS ratio is the sales, the contribution divided by sales. CS ratio, contribution to sales ratio, is the contribution. How do you get the contribution? Contribution is the selling price less the variable cost, which is the 20 minus 15, divided by the what? Divided by the sales. Sales is 20 times 100, and that will give us 25%. So when you get the 25%, then you divide it by the fixed cost. It will give you the sales revenue exact. So let me write it somewhere here. Let me turn the camera down. So to be equal to Ghana city of still the same 3 million. Please don't do both. But if the selling price is in the question, don't worry yourself with the CS ratio. Continue using this and then you go. If the selling price is in the question. So that is it. But now let's go to B. What is the B? The requirement. B says what? The unit. B says the unit, they require a profit of what? So units required to earn a profit of what? 75,000. Is it before tax? Okay, it's before tax. That's what we want. If the question is silent, just go straight. Wow. Please. Please, break-even point. I use the point. Point means 2 items. I calculated 3. One was alternative. I calculated units. First, I calculated value using the first formula. Then I calculated another one again. The same value using an alternative formula. How do we get that? I let the board is off. Okay, now. Okay, sorry. So please, the one who asked the 3 items. It was an alternative that I used. So you have to only do one. Break-even point means 2 items, the unit and value, but not 3. Good. Okay. Now let's see. Yes. The top session is true. And it's true. Good. The top session wasn't coming. Yeah. So what you do is, we said that the unit required is equal to the formula, the fixed cost plus the target profit. Here there's no tax issue. Target profit. Someone said that. Right, you are doing it here. Because fixed cost you shortcutted it. The target down here written it in full. Don't worry. All about contribution per unit. Sorry. So that is it. Now, what we do is this. What's the fixed cost? 970,000, right? Or 72? 970,000. 972 or 970? Good. So 972,000 plus the target profit of what? 75. Yeah, there's no need for you to find before tax because it says before tax already. So that's what we want. Good. Of 75,000. All divided by the contribution per unit, which is 5 Ghana cedis. So therefore, what will be the answer? 209,400 units. Good. I'm doing the, oh, this one is B. I'm doing the C. Let me do the C here. C, they say after tax profit of what? 100. So you know, we have to gross it up. You have to gross the tax up. How do you gross the tax up? After tax of what? 100. So for C, the formula will be like this. The fixed cost plus the target profit divided by 1 minus the T, because what they give us after tax. How we get it? Good. R divided by, so the contribution per unit. Okay. So here it will be like this. Fixed cost is 972,000 less what? No, we are adding over. Plus 100,000 divided by, what's the tax rate? So 1 minus what? 0.4. Good, like this. All divided by 5 Ghana cedis. What is the answer? Sorry, oh, that session is not coming. So sorry. So let's go down. Slowly down. Slowly down. Sideways. Good. So all divided by this. So if you don't want trouble too, you can find the before tax here. Then you are done. Please, what do you get? So 227773 units, right? Please, we are done. So that is it. Now take this one. This one is take home. Calculate the profit if the company produces 250 units. What will be the profit if the company produces 250 units? Then I'll do margin of safety after this. Margin of safety. Okay. Okay, so now let's start the game. So what I'll do is this. We are done for. The question is this. We are solving the same. So that will be the D part of the question. D. If the company produced 250 units, what is the profit? Prepare profit statement. Well, profit statement. As soon as you are done, please take a picture of it and forward it to me. For those who will do it, they will smile. They will do what? Smile. Yes, smile. The unit is what? If the company produced 250 units, what's the profit? From the first illustration that we did, how we calculate the profit? Start from sales revenue, multiply this by the selling price. What is the variable cost? What is the fixed cost? And then what is the profit? You are done. If you do this, you smart. So
that one you need the table.
Yes, that one you should use the table, the vertical section. Yes, one. Good. So the question will be, yes, I'll share the question. Let me go straight to the game. Let me see. Okay. I think this picture is not coming over. Should be trouble today. Good.
I don't know if we can limit so that
Good. That's the meaning. We are grossing up. This very one, this 1.4, we are grossing up. If you don't like this approach, just calculate it somewhere. Tell the examiner that if net profit is 100,000 and the tax rate is 40%, what's the profit before tax? So therefore, the profit before tax will be good. So grossing up. So you pick what you want. I want 100%. Profit before tax is 100. Net of tax. This one is representing 60%. So divided by 60. How do you get that? Times the 100,000. So that is the good. So when you do this, 100 divided by 60 times 100,000. 1, 2, 3. So the answer is 166 times 6 is like that. No, then you add it. So you do this calculation here to get 166,667. Perfect. So it means that when you come here, why are you? You will not show this. You only show 166,667. Perfect. So this is how you show. So 1 minus 0.4 is the tax rate. 1 minus the tax. It means that we are grossing up. We are grossing up. So that is it. Good. Okay, so thank you very much. So now let's look at this question. This very one. Where are you? Good. This one. Yes, this one. So start work. It's a class test. Why do? So why this? Why class test? Good. Let's do together. There's one that you're going to take it through. Please pay maximum attention to this very question. And especially those that are going to take the years. So first question, income statement. As related that you'll be given income statement. This is the income statement. And then you'll be told to perform some few calculations. So let's see. Ecopon Limited. Ecopon Limited. A manufacturer organization. A manufacturing organization has budgeted profit statement for its next financial year. When it's expected to be operating at 75%, take note of this, that they are not operating at full capacity. Exactly. They are not operating at full capacity. They will not be operating at full capacity. So this item here represents what? Operating at 75. Budgeted sales is given below. Sales is what? 9,000 units. It means that they are 75%. If they are not at 100%, they are not full. They are 75 is 9,000 units too. So when they are full, it will be what? As soon as they give it something like that, they start analyzing it. So if we are operating at 75% and then the unit is 9,000, then when we are at full capacity, then what will be the unit? If more, those kind of stuff. Then sales is there, 288,000. Wow. I receive another one again. Okay, that's fine. Now sales is 288,000. Less direct material. Direct material 54. Direct wages, that's labor, 72. Production overhead. The production overhead. Interesting. Production overhead fixed. Variable 18,000. 186,000. Gross profit 102. less administrative and selling. Fixed variable 36.27. So therefore, the net profit is this. Full stop. Calculate the break-even point in units and sales revenue. Good. So that's 6. Okay. Good. So first of all, it's time to calculate the break-even. So you scan through break-even point. Point means in units and in value. Point means in units and what? In value. Good. In units and then in value. That's fine. So what do we do? So first, let's go to the board and start our formula. Break-even units. What formula are you going to use? Break-even units. What formula are you going to use? Okay, break-even. So let's go to the board. Now be with me. Be with me. Hey, where's my desktop? Where's my desktop? Sorry. Okay, so break-even. Good. So I'll start. Please make sure I get every part of this. So, hey, the video is off. Please confirm if your video is off. Good. Now, break even. So A, they say break even point. So break even point. Break even point. So I know that we have in units. So I'll do the unit first. I'll tell the examiner that, sorry, the part, this one is not coming. Good. I think it must come down. I'll be there and the board will follow me. Then it must come down to get, okay, yeah, good. So, A, break even. Wow. Break even point. Don't forget that point, we have value and then the unit. Unit that must be produced. Let's go to the formula for the unit. It's equal to the fixed cost divided by what? Contribution per unit. Please, the fixed cost is total fixed cost. Take note. Fixed cost is total fixed cost. So, comma. Let's go and look for the fixed cost and then the contribution per unit from the question. So I'll project again. And then you are selecting it for me. Although some of you have started pushing answers. Yes, I like that. So that I get it to fine. Because you are in the last minute. Good. So how do you get a variable cost? So the budgeted statement is given below. It says sales 9,000 and the selling price is 32. Good. Direct materials 54. Direct wages. So the fixed cost, sum all the fixed costs together, and please sum all the variable costs together. You are done. That's the good news. So any variable cost you see, sum it up. Any fixed cost you see, sum it up. The fixed costs are only 2. Who can tell me? I've seen the fixed cost. The only 2 fixed costs we see. One coming from the production overhead and what? And the distribution. I like that. Selling and distribution fixed cost. So the fixed cost is 36,000 plus what? The 42,000, making 78,000. Agreed. Please, I hope everybody gets it. Good. So, comma. The fixed cost is equal to, so working, just going to be working somewhere. So let me leave some space. Let me assume that the value will be here like this. So let me say value. So these ones are workings. So the calculation of the fixed cost. So total fixed cost will be, you show your workings, or you can show it there. So the total 78, I like that. So that will be, you add the two together, 78,000. In fact, this one, there's no need for me to show working. I'll do it on top there. Don't worry, I'll do it on top. Those that need workings, I'll let you know. Because if you are going to rely on workings plenty, if I time finish, I didn't really. So it's equal to, we added 42,000. So the fixed cost is nothing by 42,000 plus 36. This one is your workings. Please, I like this answer more than you writing 78. 78 is nowhere in the question. Prove how you got the 78. So that's the fixed cost. Agreed. Please, who don't get it? Let me go back again. For this part there, every bit you have to get it. If I move, you have to move. If I move, you have to move. Have you seen? So that's the game. Good. Now let's continue. So the fixed cost is 78. Agreed. Now let's be the contribution per unit. That's what we don't have. So let's go and calculate the contribution per unit. Now who can calculate the contribution per unit for me? How do you get contribution per unit? How do you get the contribution per unit? Wow. The 78,000. The 78,000, we had it by adding the 42 plus 36. It is the fixed cost. Okay, let me project the question again. Now now this is the question. The fixed cost, there are two fixed costs here. You can see one at the production overhead, which is 42. You can see one at the distribution, which is 36. Putting all together, making what? 78,000. Agreed. That's the fixed cost. Yeah, don't forget that the fixed cost has not been given to us as like once. Here we want the total fixed cost, whether production or non-production load. I like that. Somebody have sent me the contribution. Hey. So now let's go and then pick the contribution per unit. How can you get the contribution per unit? It means that we have to get the variable cost per unit. I think when you get the variable cost per unit, it will be fine. So get the total variable cost for me. Everybody start work. Total variable cost. Just be adding all the variable costs together. I am done. If you add all the variable costs together, add all total variable costs. Let's start adding. Anywhere you see variable costs, add. But if you want to get the total variable cost, it's all costs except what? The fixed cost. So starting from the very first one to the very last one. I like that. Any answer is valid until the final marking scheme is revealed. Perfect. So let's calculate all the variable costs. Please, all the variable costs. So we start. Direct material is 54. You note it, you put it down. Wages, 72, that's direct labor. You add. Production overhead, fixed. This one is not a variable cost, so don't include it. Variable production overhead, 18, add it. Then jump to distribution cost, variable, 27, add it. What do you get? That's what I'm looking for. How do you get that? You have 13. Hey, 13. Is it 13 million or 13,000? 159,000. Please, everybody must get the answer correct for me. Everybody. Everybody. It's something that you will do. That was. I'm getting two different answers. 13. 13. See? Okay. I get you. Let's hope we've not reached there yet. So tap for us. We will get there. But now I need the total variable cost. The total variable cost you had was good 171. 171. 171. Please, someone posted 159. Kindly check the 159 for me. I like that. Everybody should get the answer. Add all the variable costs to it. Or add all the variable costs to it too. All the variable costs too. All the variable costs. When you add what you get, good. All the variable costs. So it includes all the costs that you see except the fixed cost. I like that. Let the answer flow, eh? Let the answer flow. Good. Let the answer flow. So now everybody got it correct. So 171,000. Good. 171,000. Please, if your answer is not here, kindly forward your answer. Yes, I've seen your answer. The second version is correct. The first one wasn't good. Good. Thank you. Everybody. So how to get a variable cost? Good. So let's see. Total variable cost. In fact, total variable cost. So you start the direct material. It was wages, variable production overheads, selling and distribution cost. Good. Here was, do I even know the figures? Do the figures there?
Yeah.
Good. Direct material is what? So 54,000. Wages is 72. Good. Variable production overhead is what? 18,000. And then the selling and distribution cost variable 27. So that is it, 27,000. 27,000. Good. So 27,000. Putting it together, what do you get? Now let's continue. So what do you get? Total variable cost will be 171,000, right? So who can find me the variable cost per unit? This one, how many units? What's the unit? Number of units produced and sell. It's 9,000, right? Let's go and pick it from the question. Number of units. Why is the word becoming too big? No, the thing must go backwards. Which one am I using? Which set am I using? Okay, good. So this one can back. Good. So I think I can fish it back small. Please, the unit is 9,000, right? What's the cost per unit, variable cost per unit? So, please, what is the variable cost per unit? Okay. Hey, I've destroyed the channel. I've destroyed the connection. 19. I like that. Everybody should get the answer. If the unit is 30, 19. So the variable cost will be 19. That's the variable cost. So what's the contribution? Who can find the contribution for me? So who can find the contribution for me? I think the board is a bit clear. I don't understand why the board is clear. So who can find the contribution for me? Have you seen? Then you are doing the work? No. I like that. Please, in the class there, in our class there, you do more than I do. You do more calculation. One pair will do, you do the rest. So contribution per unit is what? You had 16. The variable cost is, what's the variable cost? Okay, the variable cost is 19. Okay, it must go to the down, sorry. Good. So therefore, okay. Please, is the board okay? Now, so therefore, the variable cost, total variable cost is 171. Agreed. The total variable cost is 171 Ghana cedis. And you have produced unit of 9,000. So what's the variable cost per unit? So therefore, variable cost per unit, this divided by this, and you get 19 Ghana cedis. So it will be 19 cedis per unit. So this was the answer they're giving me. Some people, you gave me the answer long ago. So that was the final, your final answer. But that's good. That's good. That's good. This is Madam Ama. That's good. Okay. Good. So now this is a variable cost per unit. It's 9 Ghana cedis per unit. So now let's go and calculate the break even. We know that contribution is equal to selling price less what? The fixed cost. So the selling price is 32 minus 19. Answer, which is the 13. Good. Wow. So therefore, what is the break-even unit? So break-even unit will be the fixed cost on top less the selling price of 32 minus what? 19. You are done. How we get that? I like that. Good. Please, the 19 is this one, oh, this 19. No, this very one. The variable cost per unit. This is the variable cost per unit. Let me start from here. Variable cost per unit. This is the variable cost per unit. Good. It's 19 Ghana cedis. Good. So the break-even unit is what? 6,000 units, right? I like the question. But the question is some point. 6,000 units. Perfect. Now calculate the break-even sales revenue for me. That's the value. So kindly get the value. Well, from the 32. Good. Please, how do you get contribution? Contribution is equal to this selling price minus the variable cost per unit. The variable cost per unit. Good. Now the 32 is the selling price. Is the selling price which was given to us in the question. And let's go there again. Sorry. The selling price is what? The selling price. Okay, let me forward this to everyone. Good. Everybody have it now automatically. Automatically, in everybody's WhatsApp page. Everybody have it now. Good. Everybody. Everybody have it now. Hey, sorry. Good. Everybody have it now. Okay, so that is it. Please, how we get it? Here, you have to slow down. Yes, you have to slow down a bit for everyone to get it. Good. Okay, so the 32 is the selling price. So the selling price 32. They said 9,000 units at 32. Agreed. Perfect. 9,000 units at 32. That's the coupon. Okay, now let's see. Wow, so what's the sales value, the break-even sales value? Please, I'm about to clean the what's the name, crap? I'm about to clean this session, so kindly copy this session before I take it off. How to get the total variable cost. This is the total variable cost. Total. We divide it by the unit and then we get the load. So going, gone. Good. So that is it. So 6,000 units. Perfect. Now let's see. Everybody must get the answer. So value. How do you get a value? How to get a break-even value? So break-even value is equal to break-even unit. So now if you don't know the unit, you can't do the value with this approach. Break-even unit times what? What's the name? Times the selling price. So the break-even unit is what? 6,000. The answer that we get here. If this answer is wrong, don't force yourself to continue because you follow you. Good. Don't force yourself to continue to follow you if you know the answer is wrong. Okay, so times selling price of 32 Ghana cedis. So that will give us Ghana cedi of what? And 192,000. So 192,000. Servicing how many it is? Good. So this is how you get the first one. So get it for me and then you'll be fine. If there's any question, kindly let me know. If you don't get anything, please let me know. Good. Someone have a question? Someone have a question? So I'll go and pick the question up and come and continue the remaining questions. So I'll go and pick the question up. That's good. In fact, that requirement, I'm about to add more to it. There's a specific requirement that I need. There's a specific requirement that I need. Good. Specific requirement that I need. That one is not there, so I will add it. There's a question that is not there. That one, I'll add it. Please, what happened to the direct wages? That's what we use to calculate the variable cost. That is what we use to calculate the variable cost. The direct wages was part of the variable cost. When we started the game, we said the variable cost equal to direct material, direct labor. Labor is the same as what? Wages. Direct expense, there's no direct expense. Then variable production overhead. So we added these three together to get the total variable cost. The unit is 462. Please, the 462, good. Let me try to get a 462. It means that 42,000 plus 36 divided by 32 less 19. Will it be 462? That's 462 units. Okay. Let's do the calculation again. Provided that how we drive these figures, they are okay. This here is 78, so to be 78,000 divided by 13. I think that would be the, because this plus this is 78. This minus this is what? 13. Good. You don't need to break it down to this because we're not doing mathematics, so we have to just go by this and then write the final answer down. So 78,123 divided by 13. Yes, I think it's 6,000. Good, so that's fine. Now let's move on. Now the next requirement on the list. So let's go to the question. Let's go to the question. Their contribution to sales ratio. Hey, okay. So let's start work. Contribution to sales ratio, the CS ratio. 1 mark. Who can calculate it for me? 1 mark. So contribution to sales ratio. Okay. Good. I have my first answer here. Please, that's how we. In fact, all the questions, in fact, my question is there. All the questions are very good for you. All the questions are very good for you. In fact, this, the CS ratio, contribution to sales ratio. Calculate the contribution to sales ratio. How do you calculate contribution to sales? Is the contribution over sales times 100. Perfect, you are done. Please let an answer flow. I'll pick everybody's answer. Please, I'll pick everybody's answer. Please, and pick again. Please let your answer flow. Better. 4.5, I'll disagree. Someone said 4.5, I'll disagree. Please, I'll check everybody. If you see high, it means that I need my answer. Contribution. What is the contribution per unit? What's the selling price? So contribution divided by the selling price. Good. So I like the answer too. Wow. I like your answer. I like it. What's the CS ratio? But everyone should get it correct too. Everybody. What's the contribution? So CS ratio is what? The contribution divided by what? Contribution divided by. Good. I like that. Final one. I like that. In fact, I like the answer. Good. So contribution, the CS ratio. Good. It's also called, in fact, I like the answer. I like this answer. Good. Percentage of 40.62. But I like that. Wow. Huh? I like, please make sure that you get it to. Yes. But your answer is good though. Someone's answer. Someone had it correct. So there's a progress. So therefore, B. What do you do? B. Let me do it now. B will be CS ratio. There's no shortcut. Let me write it in full. Contribution to sales ratio. It's nothing by the contribution divided by sales. You are done. Which is equal to contribution of 13. This minus this divided by sales of 32. Alternative, when they give the P&L, alternative times 100, that's alternative. How do the alternative here? It's equal to total contribution, all divided by total sales. That's all. That's the alternative. But I've not done anything new. This is contribution, but you are picking the total. I have to also pick the total sales. But sometimes you may not get the. So total contribution will be total contribution, all divided by total sales. How do you get the total contribution? It's equal to the total sales revenue less the total variable cost. I'm using alternative approach. So total contribution will be the total sales, 288. Agree? Have you seen it? 288. Kindly check for me so that we know where we are picking the figures. Okay, that's fine. Good. So the total sales is what? 288. How we get it? 288. Now 288 now will be 288. So 288. 288. 288. That's the total sales. Good. So to be 288,000 less the variable cost. What do we get by the total variable cost? The total variable cost is what? 171, right? Please, I'm working in thousands. I'm working in thousands. Let me clean the A parts. I am working in thousands. So 123 less 171. This one give a total contribution. All divided by total sales of 288,100 times 100. That is it, times 100. Good. I hope you get that. Times 100. This and this are the same, but I believe everybody uses this, so that is it. So the CS ratio is the 40.6%. We are done. Good. So that is it. How we get that? But I prefer you choosing this approach because it's the most simplest one. Don't have any issue. So now let's move on to the next one. The next one, everybody should try it. Yes, if I do one, you do one-to-one mapping. Please, the next one. I need the answer. Start mentioning it. So some of your answers are already. The answers are in. Please make sure that you get it to. Okay, so we are doing the C. Let's go to the question. Oh, sorry, the question is not here. I'm saying we should try. The C says that calculate the number of units that must be sold to earn a profit of 52,000. Start work. The C. Okay. So what to be the unit they must produce? Good. So if your answers are ready, let me know. Wow, I like that. Some good answers already, you know. Wow, I like that. Or did you prepare your answers? There was not a mention. No, you are giving it to me. Huh? Please check your C again. Let me respond. Kindly check again. Kindly check again. Please, now let's again. Good. I like that. Answers are flowing. Oh. Please, answers are flowing. I like that. The value of 32,000. In fact, I like that too. In fact, I like the answer that you are showing. Please, everybody should get the answer correct. No, this kind of yeah, good. Everybody had it correct. So I think we will move on. We will move on. Everybody had it correct. 10,000. Okay, so C. Let me go through the C. Just that I didn't see the D first. We could have done something great. Something spectacular. Good. So let's do something here. C. Unit required. Unit required. Which will be the fixed cost plus the target profit divided by contribution. Fixed cost was 78,000. Target profit is 50,000. Yeah, no tax, so don't even worry about the tax issue. Not at all. Divided by 13. The answer is 10,000 Ghana. Hey, not Ghana. 10,000 units. Perfect. Good. Okay. Okay, so wait, sorry. So that is it. Perfect. Now let's go to the D. As usual, if I do anyone know, I'm in the game. You are doing the question, no. Good. Because so we are going to D. We are going to the D. And then we are done for break even. What level is just the margin of safety? And I'll go through it a little. So first, what do you do? D, right? What's the D? What they say? What does we should calculate?
What profits? What did the company
What will be the profit if the company is operating at full capacity? Can you be with us? Hey, my people are going, why? They are going, okay, don't worry. So now the profits, they do not prepare the operating profit, but here I will change the requirements. I am going to change what the requirements, because in this slide it makes it a bit straightforward. So here the requirement will be this: you are required to prepare the operating statement if the company operates at full capacity. You are required to prepare the operating statement, which is same as what? The income statement or the profit or loss statement. Good. The profit or loss. If the company operates at what? Full capacity. So that's the part. Come do that one. So what do you do? In fact, all the variable costs, we have to go and get per unit basis, all the variable costs. So there was material there, you have to get per unit. If it is 54, and then the unit is 9,000, then the material cost per unit will be what? How do we get that? No. Right. How do you get a 19, brother? You get a total 19. So kindly go through. We are going to arrange it as they have done it here, as they have done their own. So arrange it like this because the company uses absorption. They will tell us the company uses the absorption costing. So they will tell us. Let us arrange it like this, how they've done it. So get a material cost per unit for me. The unit is 9,000, and then the material cost is 54. So to the per unit. So material cost per unit to be what? Perfect. Direct wages cost per unit to be what? So kindly get a per unit for me, and then you are fine. So that's the only issue with this. So all the per unit. So you divide all of them by what? Individually by the unit. 9,000, 9,000, 9,000 to get a per unit. So that's the first thing, and that's the second. First thing, you have to find the unit. You have to get a full capacity. So someone should get that one too for me. But that's the most important part. Yeah. What's the full capacity? If we are operating at 75 at the top there, if 75 units is 9,000, then full capacity, that's 100%, right? Will be what? Good. So if 75 is 9,000, then full capacity go. That's the first thing we must find before we come to the variable cost. So let's do that. Full capacity. So let's go to the board. Now be with me. I like that. If we are operating at 75%, is equal to 9,000 units. So therefore, 100 full capacity, 100% will be what? We don't know. But you can ignore this and go straight forward. Full capacity will be what you want, 100 over what you have. I have 75 times the 9,000. That will give us what? 12,000 units. That's the first thing you have to do. So it means that we are calculating the profit when the selling unit or the sales unit is what? 12,000. I like that. How we get the question? So the examiner could have just asked us that calculate the operating statement or the profit if the sales unit is what? 12,000. So anytime you see this, calculate the profit if the unit is this. That's what they are looking for. But here we didn't make it straightforward. How we get that? Good. So that is it. So make sure that everybody gets it too. The profit is 78,000. I like that. 78,000, eh? Good. I like that. Wow. That's interesting. I like that. Now let's see. Let's hope so. So on the D part, we are calculating the profit if they are operating at full capacity. First of all, the full capacity, you have to get the unit. So what's the full capacity? The unit. So if at 75, your unit is 9,000, then at full capacity, 100%, what will be your unit? So we go and we have 12. That's the first thing you have to do. And please get a variable cost per unit. Everybody help me. So therefore, variable cost per unit, all the variable costs. So let's start. Material, what will be the material cost per unit? Material. So now let's come to the variable cost per unit. So variable cost per unit. Are you supposed to do this when you're doing the first question? You're supposed to do that when you're doing the first question. Just that we didn't see this question first. So the variable cost per unit will be. So the material is, what's the material cost? Let's go and pick it up. The material cost is, I guess everybody have it. So now the material cost is, 54, right? So show working, 54,000 divided by what? 9,000 units. Good. By the 9,000 units. What do you get? So that's 4.5. What again? Direct wages, right? So wages will be what? That one also will be the 72,000 divided by 9. This is what you get?
Divided by
9,000.
Sorry. I thought you were in the 12,000.
No, not the 12,000. Should be the. So 54,000 divided by 9,000. So that one is 6, right? Good. Thank you. That one is 6. Now what's the wages per unit? The wages is 2, right? No, 72,000 divided by 9. It should be even more than 6.
8.
It's 8, right? So 8 cities. Now let's move on. The production overhead. Please, I hope everybody get a question so we can take. Let's go to the board. Let's go to the board. Yes, it's 6. Thank you. So the production overhead will be. So production is 18,000. So to be 18,000 divided by 2 by 9,000. That will give us 2 cedi. Then what again? Distribution. What is the distribution? Distribution is what? The distribution, variable distribution cost. So when you get it, distribution is into bracket 27,000 divided by 9,000. That will give us what? 3 cedi. In fact, if you put all this together, it should give us the 19,000. Have you seen how we use a smart way to get the 19,000? Perfect. That part is not coming. So let's go down a bit. So these are the items that we need before we can start the work, especially the individual items. These individual ones, we need them. Very important. So I will ask for them. How we get that? So can we jot them down and let's start operating statement. So we are going to prepare a new profit and loss statement. But here, let's follow their format. Okay? Yes, we are going to follow their format. So we start sales. It will no longer be 9,000, it will be what? 12,000. Then let's direct material. So the material cost is 6 by 12. Each of them multiplied by 12. How we get that? Good. So that's what we are going to produce now. Please, I hope everybody get it. I hope everybody get it. Good. So the total variable cost per unit is 19. Good. Though there's a shortcut, please. I am not answering the requirement which is there. If it's a requirement, then can be done. The answer is 78,000. Finish. But I want us to prepare operating statement, income statement again, using at 12,000 units. A full income statement, not just the profit. For just the profit is a contribution less what? The fixed cost, then you are done. So I'm going to dash the board and start. But please, I will need these figures. So if you don't have them, just jot them down. Let me give you some, let's say 2 seconds, jot them down. And let me complete it. From there, then we are done.
So the 78 is correct.
Yeah.
I thought
you had 78.
I had 78, but I thought the variable cost.
The variable cost is
the variable cost will change.
No, it's not change.
It will change.
But we said that variable cost per unit and the selling price per unit are constant at all levels of activity. If you're operating at 75%, your variable cost is the same. If you're operating 65%, your variable cost is the same. What changes is the unit. Now the unit has changed from 9 to 12,000. Please, can I dash the board to start the game? Good. Now let's go. Good. So I will need a 12,000 and all these figures. These are workings. We need this one before we can go and do the actual work. So let's see. Okay, so let's start the game. I'm starting from here. The name of the company is what? Breakeven Limited, right? So Breakeven Limited. Breakeven Limited. So Breakeven Limited. Good. Your Ghana cedis too. Start sales. Into bracket 12,000 times the selling price of what? 32 Ghana cedis. What do you get? Please, what do you get? So let's see. 12,000, 1, 2, 3 times 32, 1, 2. So get 384,000. Do you get the same? Good, 384,000. So 384,000. Then let's see. Less the variable cost. Less the variable cost. So less the variable. Okay, less cost. Yeah, we are going by their statements. Good, we are going by their statements. How they have prepared their statement? That's the same way we are going by. So let's get it. Good. And then the video is frozen. Oh, sorry for come. Then it might be the network. Good. So the cost. This one is the cost of sales. To start like this. Material. So material cost will be into bracket 12,000 times Ghana cedi of what? Material cost per unit is 6 Ghana cedis, right? Good. So that is it. Good. So going forward, it will be, but it's the income statement. So after coupon, we writing a coupon here. Means that the examiner is coming from a coupon or coupon man, a upon limited, you write the profit statement or the income statement. Income statement or the profit statement. Please here, don't forget that I have changed the requirement. The requirement says just calculate the profit. I am not asking that. I'm asking you to prepare the income statement again. If because of the profit, you are done long ago. So what do? We start by your sales revenue using the new unit, the one that we calculated. Either they'll give it to you in a question, or calculate or prepare the operating statement or the income statement when the company produces and sells 12,000 units. So times the selling price, you get the sales revenue of this, you put it down. Then you relax, come to the cost. Good, then you come to the cost. Then what do? Material, you pick the unit 12,000 by the material cost range, which is 6. So by 6 cities, what do you get? So 12 by 6, 72, right? 12 by 6 is 72, agreed. Oh, it's not 2. I forgot to know. Please.
Yeah, 72.
12 by 6, let me see.
But to get the same value.
Hey, someone said 2228. 72, no, it should be 12 times 6. 72, correct. Now let's go to wages. Wages. What are we getting? Wages. Okay, your answer was the total. Agreed. Correct. Wages is what? 96. To be 12 by 8. Good. So that's 96. Have you seen how we are doing it? I like this one. If it be just the profit, there's a smart way to calculate the profit, but I'm not interested in the profit. The presentation, please. We are not interested in the profit, we are interested in the presentation. Good. Especially how to move between the variable cost and fixed cost. Kindly take note. How to move between what? The variable cost and fixed cost, because it's highly examinable. So take note. But because of the profit is 78,000, but how to arrange to get it at 78 is the issue. That's what we are asking. Good. So times 8 to give me 96,000. Then what do? Then what again? Production, right? So we go to production. So let me clean the top. But this one we have it already. The material, this 6, we have it, we've calculated it already. So let's go to the production. Now when we go to production, you do like this, variable. So production overhead. So variable one will be, so the variable production overhead is 12,000 times, production is 2, right? So times 2, that'll give us 24 Ghana cedis. Have you seen how we are presenting it? To suit the company's statement too. And then the fixed. So the variable and the fixed. So with the fixed one, no calculation. What was the fixed cost? The production fixed cost. The production fixed cost was 42,000. Bring it, please. Fixed cost, you don't flex fixed cost. So fixed cost need not to be flexed. This one is the same as we flexed in. So 42,000. Put it together, sum it all up, push it here, subtract, get a gross profit. We are presenting the same way as they presented to us. The fixed one is 42. We don't flex fixed cost. Fixed cost is fixed for a relevant range. Good. So the fixed cost will be fixed like this. No multiplication, no division, that's all. So what do you get if you put all together? So 42 plus 96 plus 24 plus 72. Answer. Good. The distribution cost, it will come. We are following this arrangement. Let me show you this. Kindly watch this. Kindly watch this. Have you seen what I'm projecting? Now watch this. Look at how the company have arranged their own. They started material, wages, production overhead, fixed and variable. So you can make it variable and fixed. It's going to be fixed and variable. Have you seen? Then we sum this 4 up before we push it here. So the distribution and selling, that one they are on their own. No. Don't mix it up. For the purpose of break-even, that's why we presented all the variable costs one side, all fixed costs one side. For the purpose of income statement, you have to go by how they prepare their income statement. How we get that? Good. So take note. So let's sum it up. This is how we are doing it. Good. So that's it. So when you sum it up, what do you get? I think it's 234, right? 234. So I'll get 234. We call this one cost of sales. This one is the cost of sales. So cost of sales. This is the cost of sales. Cost of sales. So cost of sales will be 234. Perfect. You take it off, what do you get? So 384 less the answer. That's 150. So that's the gross profit, right? We call this one gross profit. Gross profit. Perfect. So just follow how they have arranged it. They call it gross profit. Sales revenue less the cost of sales give us what gross profit. Agreed. So that is it. So let's continue the journey. Now let's go to the selling and distribution cost. That's the operating cost. Selling and distribution cost. So selling and distribution costs. The bracket, the variable, and then the fixed. The variable one will be into brackets. It's 3 Ghana cedis, right? So 3 Ghana cedis by the 12,000. So the 12,000 by 3 Ghana cedis. Hey, I was writing details. I'd like to just send it here straight forward. Let me see if we can go here. So I'll put it there. That'll give us let's see. We have to make sure it's go back. So selling distribution cost, we have the variable, which will be 12,000 times the 3 cedis. That'll give us 36,000, right? Good. The fixed one is what? The fixed. The fixed is 36,000. What a coincidence. I like this question, but I really like this question. There are a lot of coincidence in it. A lot of coincidence. There are a lot of coincidence. Putting them together, they get 70 what? They get 72,000. So you'll be 72,000. You take it off, what do you get? 78,000. That's the net profit for the period. Net profit. Please. The question was interested in the arrangement. The question was not interested in the final answer, this 78, because in fact, in the original question it was calculate the profit, but I've changed it to prepare income statement. So I've changed it to what? Prepare income statement. No more just the, what's the name? Just the profits. But the net profit is just 78,000. This one you can just use just one working to get this figure if we are interested in the profits. Because we know the variable cost to be what? 19,000. We know the contribution to be what? 13, right? Now to get this 70,000, the shortcut approach. Just get the total contribution. Total contribution will be nothing by the contribution per unit, which is 13 Ghana cedis. Contribution per unit is 13 Ghana cedis, right? Multiply by 12,000. So 12 times 13. That's 156,000, right? Good, 156. Where's the fixed cost? What's the fixed cost? 70. So if you take 70 from it, what do you get? You get 78,000. So if we are interested at the profit, we will tell you, and now you go by this. If you ask to calculate the profit like this, you are done. Like the same 78. But please, there's something I will ask you to prepare income statement. When they ask you for the income statement, please, when they ask you for the income statement, you want to see the arrangement, how you go by the variable cost and the fixed cost in it. Whether to see whether this fixed cost you make it fixed, if you make it fixed or you make it variable. That's what you want to see. So take note. I'm done. That's what you call margin of safety. I have to introduce you to. Then I'm done for the day. Left with the corporate governance. So time is almost up. Do schedule and then treat the corporate governance. Good. So margin of safety. Let me explain that one to you. Margin of safety. Let me explain the margin of safety, and let's see. Margin of safety. Good. Then we are done. If you have any question, kindly ask before I go to the margin of safety. Good. The margin of safety. Okay, so let me quickly go to it. That one is just formula, so I'll write the formula. This one. Hello. Sorry. Please, which section? Okay, so that is it. I hope you get that. So let's kindly continue. Have the body is okay. Now let me do the margin of safety. The formula work and then you'll be fine. Just a formula. I'll give you the formula, then you are done. Then we are done with the break even. I think with this, we are fine. And then I'll walk you through some questions. Please wait to take the question. Yes, wait to take the question. So what do you do? Hey, this is a can't see. I'm not cleaning it. Please, I hope you can see. I hope you can see. So that is it. That is it. If you can see. Wow, seems that someone cannot see. Now, sometimes, if you know that when you produce, what's our break even? When you produce 6,000, we are breaking even. Let's assume that then you are going to enter into some business. If you sell 6,000 units, you break even. You won't get profit. You won't get loss. Tell me, what will be your budget? Will you budget for 6,000 or you budget for less? Tell me, how much do you budget for? If you sell 6,000, your profit will be 0. If you sell below 6,000, you get loss. If you sell above 6,000, you get profit. How do you get that? So now tell me, write any figure, any unit at all you want to sell. Tell me any figure that you want to sell. Any unit that you want to sell. Any unit that you want to sell. Good. Any unit, 9,000, right? I like that. Good. So 9,000, this 9,000 units, that's the budget. So budgeted unit. So it means that you are allowing for safety. What's the safety? The budgeted unit. It means that you like putting some insurance. Okay, I like the 10,000. Some of those who say 10,000 units. I like that. Good. It's also called budget. So that's what I'm budgeting for. So the issue is this. You have allowed something. The excess one, the break even is 6,000. So over here, I'm bringing 3,000 more. Have you seen? You add this 3,000 so that if the unexpected happened, at least This 3,000, you should lose this 3,000 and maintain our 6,000. So you have what we call margin of safety. How safety you are, how cushion insurance you're providing for yourself. Margin of what? Safety. Basically, you have it already. It's the difference between the budgeted unit and then the break-even unit. This is a break-even unit. So the difference between the budgeted unit and then what? The break-even is called margin of what? Safety. That's all. So basically, I'm done. Margin of safety is the difference between what? The budgeted unit and then the break-even unit. Let me quickly go to that one. So we have it in units. We have it in three folds: units, value, and then the percentage. Oh, as a percentage, good. A unit is equal to budgeted unit less the break-even unit. Good. So yeah, let's pick at their budgets. They are 75% the budget, not the full capacity. So the budgeted unit was 9,000 units. What's the break-even unit? 6,000. So the margin of safety, the safety that is added is what? Is equal to 3,000 units. Agreed. What about the value? To get a value, don't you worry yourself. You get a margin of safety in terms of value, multiply it by what? By the selling price. It will be 3,000 by 32 Ghana cedis. You are done. As a percentage, it's equal to the budgeted unit, or budgeted unit less the break-even unit, all divided by budgeted unit. But I'm talking plenty. If you don't want trouble, it's nothing by the break-even, margin of safety unit. So the margin of safety in unit. How do you get the margin of safety unit? Is it 3,000? Budgeted minus the break-even. You are done. All divided by the budgeted unit. All divided by the total. So that will be 3,000 divided by budgeted of 9,000 times 100. So that will give us 30% or so. We are down the margin of safety. Yes, good. Okay, good. At least I'm done. So the answer, let me see. 3/9, that's 100 divided by 3, 33% or so. 100 divided by 3. That's 33, 1/3. 33.3%. Okay, so I'm about to end the game. Yeah, like it should be interesting at the. So we are done with the break-even. This venture. Please, there will be question coming. Let me project the question, okay? When the question comes, please do justice to it. The name of the question is under construction. Yes. The question is under what? Construction. Yes, it's under construction. But it has finished for material and then the overheads. It's called Brahabeda. That's the name of the question. Good. It's called Brahabeda. Good. So that's the question. Brahabeda. So when you get it, can you do justice for me and take serious of that question? Brahabeda hotels, the company that are in hospitality, taking care. Now, you know that they are into service. So for service, they don't have sales, hotel. So they have charge. So be like number of what person, and then they charge per person. That's the selling price, and you get the total value. So the occupant charges, this one is occupant charges. Might be occupant charges. So we said the questions under construction. Good, so I finished. And then the requirements. Compute the contribution ratio, break-even point, both sales and units. And then the profit statement, if the occupant charges increase by 10% in that order. So take note. So I'll forward it to you and then you do that. And then the solution will follow at the intervention stage. Good. Now, we are done with the corporate governance. I think we will discuss it. We will agree on the idea and then we discuss the corporate governance. I have the material, the aspect. So I'll highlight it briefly for you. Before I do that, let me end the break-even first. The value, break-even, the value will be the 3,000 times 32. Think down for it, I didn't give me an answer. I did not request for it. This one is the value, margin of safety value. Is the unit times the selling price. 96,000, good. So that's the budgeted. If we are doing it at the 12,000 activity level, then it should be 12,000 less 6,000. Here we are doing that 9,000, their normal capacity. So that is it. Good, so that's how I get the values. Make even in value. Good. So thank you very much. Let me quickly